You're a big Nike shareholder. It's about 2% of total assets for you. What are you expecting from this report?
Well, I agree with the most recent comments that the number one thing that we're trying to keep an eye on is margins, because what we're concerned about in all of our portfolio is owning these global champions that have enduring pricing power. And so our biggest concern, and when I say pricing power, what I'm meaning by that is if you have identical competition come along and they produce something better, faster, and cheaper. So in the case of Nike, we're looking like Hoka and On. I want to know, do people still choose Nike at a premium price? And so we're wanting to make sure that gross margins are able to recover from the prior lows.
All right, so you're talking discounting. I got to be honest, I'm a big Nike person. I wear the sneakers a lot. When you go on the website right now, almost everything's on sale right now. How concerning is that going into this print?
Well, I'm not going to lie. It is concerning because, we view Nike as a luxury business. Mm-hmm. And when you're luxury, you really got to balance that exclusivity and growth. And obviously what happened was they misread the tea leaves after COVID. They continued to push really heavily into DTC. They relied more or less on the wholesale channel. It led to this inventory glut. And so now we are worried about, can they wean off that promotional pricing? Because that's something that will damage the brand over long periods of time. So is this a short-term issue or will they recover back to that premium pricing?
You're hitting on something a lot of analysts have talked about, just the fact that Nike's direct-to-consumer business has grown. I believe right now it's about 40% of total revenue. And I was very surprised. I looked this up, and I know you sent it to us as well. There's no one retailer, not even Foot Locker, that has like a house of Nike inside of it, accounts for more than 10% of sales. In the short term, it sounds like you're saying that's not a good thing, but long term, isn't that good for Nike to have this direct access to its customers and also all the data?
Oh, no, it's a wonderful thing. In fact, direct-to-consumer is far more profitable. The issue is that they smartly tried to move away from the wholesale channel so they had more control over distribution, better, faster execution, better customization. But what happened is they pushed so heavy into it during COVID because they saw the DTC channel growing so much, they overdid it. And that led to the inventory glut. So now they've needed to return a little bit back to the wholesale channel, realizing that, you've got to just do where the demand is. And they're finding that.
So good long term, but putting a little pressure on margins right now because they have extra inventory. People also shifted spending from goods to services, another factor. You mentioned premium a couple times. I want to talk to you about the Jordan brand. Very strong sales for the Jordan brand year to date. In fact, I believe back in June, Nike was saying they think it's going to overtake the size of Adidas at some point next year. A lot of sales there, too. I'm a big Jordan person. By the way, anybody listen, I wear 1s and 3s. But are you concerned about the strength of the Jordan brand going forward? Because, if we're just going to be real, there's kind of oversaturation. Everywhere you look, somebody has a pair of Jordans on.
Yeah, again, it's the balance of exclusivity and growth. So, I look at like Apple, for example. I think there is nobody that has been more successful and arguably the strongest global consumer brand and able to take a premium pricing to the mass market. And Nike is trying to follow the same playbook. But I have to agree that, this is something we're keeping our eye on because one of the things that really attracted us to Nike, if you look at the resale market, they sell these Jordan shoes, and the top 10 most expensive sneakers in the world ever sold all time in the resale market, 8 out of 10 are Nike. 18 out of the top 25 are Nike. That's pretty indicative that there's pricing power because they're selling their shoes. There's this limited exclusive distribution, and then the prices just skyrocket. Historically, just recently, about 3 months ago, that started to look a little bit shakier after decades of strength.
Right.
But what I don't know is that more a function of the consumer and the consumer having, high inflation and losing real purchasing power?
Okay.
Or is this a long-term issue? And so we're keeping an eye on it. It has rebounded a bit.